everyone, it's Stuart here. Welcome to a new month and a new trading week as well. Obviously, it's Monday, the 2nd of June, so I hope you're all well. Stock markets had a stellar May. We sold off a little bit on Friday, and here on the Nasdaq, having rallied on Thursday all the way up into 21,800 Nasdaq 100. And we closed down on Friday, and we're up a bit this morning, sort of round about where we got in on Thursday. We're still long the stock markets, those positions we took on the 27th. Those evening closes. There's a whole position here open on the Nasdaq. The S&P hit its first target on the 29th here Thursday. I think it was Thursday actually, wasn't it? Was it 29th or 20th? I can't remember. Reversed. Our stop loss is all the way down here. That's still open. That's half a position there. The Dow also out of the money again. Nice rally. Didn't quite get to its target zone here. I didn't actually put some targets on these US indexes last week, but I've left them open as we moved into the new month. The DAX also was long that same evening, the 27th. That's actually hit its stop loss this morning. Probably should have taken that out, having got within a point, literally within a point of getting stopped out here on Friday, on the 29th. Was it Friday or Thursday? Thursday, within a point of getting stopped out. Reversed quite well. I just left it again. Our entry was up here. We were looking for perhaps test new all-time highs. On new all-time highs again, having got to new all-time highs last week on the 28th, day after we got in, but didn't close it, and then we've been stopped out today. So there you go. That's trading for you, my friends. So first close trade for June is actually quite a significant loser here on the DAX. We've got in at 24,285, and we've been stopped out at 23,850. So quite a big 1,000-point loss there on the Dow. That's quite a hefty 2%, 2% plus, I think, hit as well on the DAX. But I wasn't watching it really. I wasn't tracking it properly. Or I wasn't tracking it. I put the stop loss on, I put the target on. I was happy with what happened with either. It happens to have hit the stop loss rather than the take profit. So there we go. That's trading for you. As I said, the other positions are still open. We closed all the FX positions out for May. We were up. I'll update the Discord group, guys. We were up for May. Sorry, where's my numbers? We were up 260 points, I think, for the week. Last week, having been away the weeks 3 and 4 of May. So for all of May, sorry, I've literally still. I haven't got it on my. It's written down here. I remember writing it over the weekend at 30. There we are. For May, we were up 1,306.473 points for May. So another successful month. 885 in week 1, 160 points week 2. Weeks 4 and 5, I was away on holiday, and we were up 260 points. Last week, and as I say, we've started June with a losing trade, but there we go. That's trading at the moment, but more tonight. See what's going to tick over tonight. It's Monday. It's the start of a very significant week. Let's just run through the calendar. Let me just change the filters on this so we're not looking at everything. I'll take some Brazil off, France, Italy. Too much data in there. Russia. Don't need the Spanish, leave the Swiss on, Singapore, so that we can come off there for what I'm interested in. Leave India on. Canada, China's fine. New Zealand, fine. No, South Korea. I want just the 2 and 3 pair candles. I want to select all of the data, so we'll just apply that and have a look at the week ahead. So obviously Friday is non-farm payrolls. That's the top of the shop this week. Today we've got a speech by Mr. Powell later on. It's in Washington. It's the Institute Finance conference hosted by the Fed. Be interesting to see if there's anything new in that. Obviously, when the head of the Fed speaks, it's significant. Obviously, so see what he's got to say on that. Miss Lagarde will trail him, as well as Mr. Bubba, Mr. Bowles, the head of the Bubba Bank. also in Washington for this conference. PMIs in 15 minutes, manufacturing PMIs. We've had the S&P, the Standard & Poor's Global PMIs. They've come in a tad weaker than expected, 52.0 from 52.2. Was expected to tick a bit higher. The more important ISM numbers are going to be out in 7 minutes time, so we'll watch those. That's potentially market moving data today. And I think Mr. Mann in Washington as well, or is he not? Sorry, Mr. Mann, this man, I should say. Doesn't actually say on that calendar. I'm not sure if they are actually in Washington as well, but it's quite an outspoken or quite a well articulated member of the MPC, Catherine Mann. Got a very strong views herself. Let's see what she's got to say in 5 minutes or so. Excuse me. Dollar remains under pressure. Just come back to the majors. So euro is trading at 114.20. Had a good start to June so far. So dollars very much on the back foot today. Euro back over this key 114.20 zone. Sterling significantly over the key 135 today. Is also a weaker dollar today as we move higher against the crosses. Dollar CAD is also has continued to be under pressure. It's come back a wee bit, back to 137, but we've been under 137 this morning. Aussie 64.75. Having a look at $.65 earlier, looking quite good. Turnaround this current hour. And Swissy 81.70, so under $.82 for the Swissy against the dollar. So dollar's very much on the back foot. 142.87 dollar yen trades, and we continue to give back. We're into this zone we had in that final week of May. The low last week took us to 142.10 to the downside for dollar yen. So many will be watching that as we start the new week. Excuse me. I think I've caught this cold from my son and my grandson in unison over the weekend, so excuse me as we move forward. So dollar remains pressured. That's helped gold this morning. Gold's been lifted this morning. Where's my metals gone? Gold is 3,375 as we speak, so it's had a good European session, had a good start to the month. In Asia this morning, and we're through this 3,350 zone, and we're into the next level, 3,375. So key strong day so far for gold. If you look at the daily time frame, see it's what a strong start to the new month we've got for gold. So big rally from this 3,300 level so far today. So big positive day for gold. Can we hang on to it or hold this big strong candle? It's quite significant. See how that candle, what that candle looks like later on today, but that's looking very good on the back of the weaker dollar. Crypto, there's lots of chatter, some rumblings out of what Musk had to say around crypto. So the 105 area has been handed back. We are at 103,750 at the moment. So we've been under our 20-day moving average, although still consolidating highs. It's still a strong area, but we're back into that 103 zone where we consolidated for best part of 2 weeks before we rallied to new all-time highs again at the end of May for Bitcoin. So it's still big, although this last leg has cooled now as we're now into our 4th day under the 20-day moving average. Next, obviously, psychological support is the 100 level, and then into this 96,000 level here. You can see this on this fib area as well as a pivot area, resistance support area. So it's 96,000. That's the two next lines in the sand for me: 100,000, the psychological 100,000, and the 96,000, 92,000 channel we were in for ages earlier in the year. But 96,000 next big support line for Bitcoin to the downside. If we cannot move much lower from where we are now, this 103,000 area holds this sort of area here, we could have another go and back to the 120 areas. We go back through and push to new all-time highs for Bitcoin. But at the moment we're back into this consolidation area, which we'd been say for over 2 weeks here, following the rip we had there on the 8th of May higher. So consolidation here, we're back into that zone. So this has provided support around this 103 area for the last 4 days. Is that going to hold? It's sort of held over the weekend, but very weakly, and we're down again today on bigger volumes. And as I say, we under the 5 and the 9 have crossed. This strategy went short here on the 30th, and this strategy comfortably in the money at the moment, but there's how much more follow through we'll see if we go to test the 100,000 level initially. But perhaps the consolidation zone may be extended. We'll see how the week pans out. So if we just go back to the week, let's say we got ISM in a couple of minutes. We'll come back to that in a minute. Tomorrow we got inflation numbers from the EU. Busy week this week. JOLTS and API also. JOLTS numbers on Tuesday. Wednesday is the ADP and the Bank of Canada. No change. 25 basis point change from the Bank of Canada. Some are saying perhaps we're not going to get a move as well. I think that's the overall. We got PMIs as well. Services PMIs tomorrow. Thursday we sees the ECB looking to move their rates to another 25 basis points to 2%. Much more likely to move the ECB than the Bank of Canada, but so we'll see how it all pans out. Private PMIs from China as well earlier in the day. Busy week, as I said. The top of the shop, and then Friday we've got both non-farm payrolls out of the United States, 130,000, and also Canadian jobs on Friday as well. So lots going on this week as we start the new month and the final month of the second quarter. And officially here in the Northern Hemisphere, we are now into summertime. So May is behind us. June, July, August, officially summertime here in Southern Hemisphere and in Northern Hemisphere. And I guess you're in winter times in the Southern Hemisphere. Northern Hemisphere, I should say. So what do we see from PMI? So a bit like the Standard & Poor's manufacturing numbers, it's way worse than expected. But it also prices actually dipped as well. So that's sort of counterbalances the miss. So we were 48.7 last month. We come in at 48.2. 48.5, not much worse than expected, but we were expected to increase by 0.6 of 1% to 49.3, edging towards that 50, where we move out of contraction into expansion. So this will just only add to the argument about potential recession in the US, whether it's going to be a technical one, whether it's going to be a longer one and a deeper, whether inflation is still this transitory nature that the Fed are talking about. The PMI data, the PCE data on Friday showed, the weakness of the sort of spike in inflation. So it remains relatively subdued in the US, but that manufacturing number has gone backwards rather than moving forward. We were expecting to move to 49.8. If we just look at the CAM, you see we're negative. We turned up a wee bit here in February and March, but now we've had April, May, and June, and the June number now worse than expected, and we're still in contraction mode like we have been for the last couple of years in the US manufacturing area. Obviously, Trump, big advocate of US manufacturing. The repatriation of jobs is part of his obsession with tariffs. It's not going perhaps as smoothly as he expected, but perhaps also not as difficult as perhaps many critics have laid at his door as well. So anyway, the data still remains non-committal. So as we move further on, more evidence that the president will say, well, this could possibly work. But interestingly as well, prices, the prices continues to hold up here. So prices still adding to the argument that inflation will push through and be sticky, but it was less than expected. It was under that 70 handle this month again, as it was expected to go up again last month, but still it's spiked up because of the front running of tariff and inventory accumulation because of the tariffs. Where we go from here is still anybody's guess, and obviously the flip-flopping, the sort of relative chaotic nature of they're on, they're off, they're on, they're off, they're off, they're on. They're not as big as they were. They're coming down. It's just negotiating tactics. It's just very, very difficult to run a business in that regard. But they're insistent, the administration in the US, that this is the way they want to go, and they have turned global trade on its head. And other parties are dealing with it accordingly. The Chinese, the Europeans are particularly in the crosshairs. But again, neither counterparty backing down. So on we go into June and see what that this week brings. Obviously, we had Friday's announcement from the president about doubling of tariffs to 50% from the 4th, I think it was, wasn't it? So stock markets were expected to fall this morning. They've actually, I think US stock markets were lower on open, but we've moved, certainly Nasdaq's moved up in the last hour. Yeah, we're all flat. This is the Nasdaq 100. We were up and then we've given all that back straight away. So as you said, as I came live here, we were back over this entry level we had here on from last week, and we're back down now on the higher numbers. Get in. Good afternoon, good evening, my friend. How are you? Hope you're well. Anything you want to trade, anything you are trading, let me know. I'm happy to do some analysis for you, or not. It's up to you. So hope you're all well and staying well. So dollars under pressure, gold's up today, and the other big news over the weekend was the OPEC announcement of an increase in production that's weighing on prices. The output hike was a bit less than expected. Sorry for the oil market. If we just go to the daily time frame, we sort of held this rally from this $55 low we got at the beginning of May, and we're holding $60 so far, but we don't really want to move much away from this congestion zone. So we've got a very sort of extended consolidation area here in the oil market. We are in, obviously, it's prime. We're just coming into prime driving season in the United States. For this is obviously US oil, so it's a prime demand season for US distillates as the universities all break up as well for the summer. Most of them obviously already finished in the US, but anyway, oil 62.38 this morning, continuing to consolidate sideways. The increase in output from obviously particularly driven by Saudi Arabia within OPEC, not perhaps as bad as many were expecting. So we'll see if this is the way the Saudis are trying to ingratiate themselves with President Trump. Obviously, they had that big meeting, his big tour of the Gulf, where he took home billions or trillions in his view of business to the United States and his free jet from the Qataris. Yeah, see how it all pans out. He obviously wanted low gas prices for the US consumer, but we consolidate, and we're consolidating, interesting here, above the $60 level. So from a trading point of view, a trending point of view, there's nothing going on here on the oil market. I'm waiting for a breakout of this level to me, either moving up or moving down, but we can trade the ranges in between. So we're interestingly, as following that OPEC announcement on Saturday, we are pushing to the top end of that channel at 62.50. Be interesting to see how that candle finishes today. If we look to the left a bit more, we can see we have here in the middle of May, we got to 63.50. So that's the next upside target level, which we've already tested on an intraday basis here today. As you can see that spike there on the today's daily candle. If we go into the hourly chart, you can see, in fact, it's been this last hour, interestingly, 63.65 was the high. It's turned around and given us up on the open of the US cash stock market. So yeah, good day for oil, as you might expect, following that OPEC announcement over the weekend. So the main data today, we had the PMIs out of the UK this morning as well. A bit weaker, a bit better than expected actually in the UK. These composite ones, that's Wednesday. What we're talking about? That's today. That's today's. Was 46.4 better than 45.4, so whole point better. Eurozone getting within a smidge of the 50, the expansion zone, also better than expected. So the US still leading, but the ISM number, for some reason, why isn't that? I got the wrong calendar, wasn't it? Sure. Oh, so I did it. We did it on the Forex Factory one, didn't we? Yeah, sorry. It refuses to connect, so I've lost that calendar, but there we are. Anyway, the ISM numbers come in weaker than expected. So Europe and UK was better than expected, and US manufacturing PMIs are worse than expected at 48.5. So oil continues to pivot, but holding the key $62 level, and the dollar, I would guess, would have been a bit under pressure from that data. Indeed, there we are. Actually, just go back to see how it's reacted to the PMI data. So there's our 3 o'clock data. The dollar's weakened from 135.28 to 135.40, so 12 pips initially against sterling, and then another 10 pips to the upside. So dollars weakened on that, and there was the 12.45. Sorry, the 14.45. The S&P manufacturing data. So the floor for cable today at 135.20 has been established, and we've rallied from that to the data, but we need to then move above 135.50 if we're going to take this any higher. So still been some sort of 30 pips in that data move. Jatty, what are you saying? Just closed my Nasdaq short trade. Now just waiting. Very good. I don't know what time you're trading, but that's been, you've had a good move on that. Hopefully you caught the move down. I don't know if you caught this ahead of the data and moved down. Is that what you're talking about? I hope it is. Otherwise, I say it's been. If we look at the, it's been actually better today. It's been this rounding bottom is always quite negative. And we rallied up, it had spiked, so hopefully you got in here and you've got out back down here, but it was sort of still trailing to the downside, Nasdaq on sideways action. So see how that goes for the rest of the day. So there we go. It's a really busy week. It's a quiet Monday usually. We get to kick off the new month. There's lots going on. There's nothing scheduled from the president today. However, doesn't mean there's not going to be anything out on through social. Geopolitically, we had that very brazen attack by Ukraine deep into thousands of kilometers into Russian territory, destroying their nuclear-powered drone, some of the big drone bombers and fleets. It's very, very audacious. The Ukrainians say, well, it's not over yet. The war isn't over yet. We've still got some cards to play. We'll see. We'll see. I'll say how that comes out. Oh, it's just taking you saying the 5 minutes happening. So well done. Yes, nice reverse. So you got to be careful with those, though, my friend. Just don't be, it can all be over very quickly. But I'm sure you're aware of that. A nice spiky rally up, but it's reversed quite quickly and down. So hopefully you got. I say you said you got some pips out of that. So well done on the Nasdaq. I'm gonna say the overall hasn't really affected. So we went up, and so it's that spike. Head of the data has just all been wiped out, basically. So the higher time frame trend, if you look at the hourly trend, it's still to the downside. We're still actually we've come back, haven't we? We're over this 20-hour moving average now. but the trend is still downside, isn't it? So if we break back under this line here, it's 21,240. We could continue to move low, but it's a rounding bottom. We went down quite slowly, come up slowly, but there's clearly rejection of higher prices both here and there on Friday. So it's a subdued move to the upside. I was looking at the as the stock market opened in the US this morning, as it was in the S&P 500, the big broad measure, not this Nasdaq 100, but most of those sectors were in the red. Earnings season is more or less is over now. Obviously, Nvidia was the big one last week. Some of the other retailers reporting as well last week. So Nvidia was still in the green, I think, this morning. It's a weak start given the uncertainty of the jobs and anything that the president said over the weekend was deemed negative for stocks and the dollar. So dollar weaker, treasuries higher, and stocks under pressure. S&P 5,885, and again less of a spike than we saw on the Nasdaq here on the hourly chart. We've got the 5-minute chart. We'd have had a similar sort of pattern there, but again, it's even more negative here for the S&P. If we look at the Dow as well, it's probably more exaggerated. It didn't even move up, the Dow, did it? It's all down. So overall, we had them all together, the Dow, the S&P 500, and the Nasdaq. Overall, it's relatively negative today to start the new month and the new week. But a very, very strong May. Very unusual for May to be as strong as it was. Best May since 1990. 1990. Here we are in 2025. So it's the best performing May for 35 years for the S&P 500, and the Nasdaq in particular was the outperformer of the three major indexes in the United States. So where are we? Well, as I say, I am still short from Thursday or Wednesday last week, the 27th here, on an end of day basis. I may be ruining that, who knows? The Dow remains long from the 27th, even though we're out the money. Our stop loss is there at 41,660. The S&P 500, it's half a position because we hit target 1 last week. And we're still long on that. Again, I might be closing those out, but I said that on Thursday, Friday, and didn't. So we're around about entry on the S&P 500 and the Nasdaq. As we just saw earlier, we're just under our entry here, and our target is the top of this, at least certainly the top of this fib level, and then the all-time high at 22, around about the 2200 level. But again, see how June plays out. The DAX stopped us out, as we said. Just didn't really manage that one when it was open, but it is what it is. We stopped out of the DAX. If I just have a quick scan of my trading platform for tonight, the new month, the new week, it's always a bit of obviously a shaking up of positions. But if I just scan my system now, I'll let you know what's looking possible. We've got CAD, Swiss, Euro CAD, pound, yen, gold. Looks like it's quite a strong long position on gold at the moment. Strong day. But it's at a target level at this 3375 level anyway. So we'll see. It's not worth. Doesn't look like that's worth doing that initially now at gold at the moment. So Euro CAD, CAD Swiss, and pound yen was the other one. So there's 4 positions, but none of them. Well, certainly that gold one's looking a bit iffy. Pound yen looks all right. That's a short position, 193.25 to 30-40 pips on that to start off with. So that's looking okay, but obviously there's still a few hours to go before that kicks off. On my other system, and there's more active. This is more aggressive, less conservative than the main system. That's got Aussie dollar, CAD yen, Euro CAD, Euro Kiwi. Yeah, quite a lot on there. I won't be able to take all of those. Gold, sterling, euro, dollar, pound, dollar. Yeah, so quite a lot on there. Quite a bit of interest on those this week. Dollar, whether it persists to the end of the US session, at the end of the day, be a bit difficult to call, but as you can see, the daily time frame on the euro is looking, you know, it's a strong daily candle today, big powerful candle through this 114 area. So that's got some bid on that. You can see we may be looking to have another go at 115 to the upside. So that's looking a possibility tonight as well. Quite a hefty 100 pip stop loss for a initial 50 pip target on euro. Sterling is a similar setup. Big strong candle today, perhaps less so, but yeah, you see closer to recent highs where you saw the euro. There's a bit more. It's through this high area already, and so you know that 115 area was hit at the end of April. So maybe some upside on that one as well. But yeah, I'll update everyone on Discord, and I'll also update I'll document the May results as well on our Discord group. So that's it for today. Tomorrow I'll be back for the same time tomorrow. We're back for the JOLTS numbers tomorrow at 3 o'clock, and then same again on Wednesday at 3 o'clock for the ISM services, and obviously we've got the Bank of Canada as well, and ADP numbers on Wednesday. So busy Tuesday, Wednesday. Very important Thursday with the ECB expected to cut rates. Bank of Canada, it's got them also expected to cut rates. They might not. They might just blink. The Bank of Canada, but anyway, we'll see. We'll find out ourselves on Wednesday. So CAD and Euro very much in play this week, and then obviously we've got non-farm payroll and Canadian jobs on Friday. So a big week for the Canadian economy and the Canadian loonie as well. So have a look at that later on. So thank you for your time. Take care, be good, and I'll see you all again tomorrow. Stay safe. Anything you want to know, stick it on our Discord group. Here's our Discord channels. Do come and join us, my friends. Our main page is over here. The main chat page is here, our general chat. I put on the trades we do here on the Trading Strategies blog. I need to update it for May and for last night. These were two losing trades, actually, these EuroCAD and CAD Swiss on 29th. That was Thursday night, wasn't it? They lost on Friday, 13 pips and 24 pips. But to say we were up 260 points last week, which is thank you very much. It's good enough for me. Keeps me happy. So take care, everyone. Join us here. We've still got, obviously, if you haven't got an account with us, do come and join us. Our 30% discount we had for May has obviously come to an end as we move into June, but we do still have 25% discount discounts available if you use if you use it's not standard challenge SC25. That still gets you 25% discount off all of our accounts. So 25,000 being the most popular, 50,000 nice hefty number. I said it's not valid, so perhaps it isn't valid. Perhaps it doesn't need it. Perhaps it has run out. Let's have a look, see if new 25. Is that still valid? Oh, that is valid. So there we are. So first time buyers, first time users, new. Work both ways. What was the spelling? Yeah, that's still working. So 25% if it's for your first account. So you know, if you got a few $100, have a go with this 50,000 account. If you've only got $100 odd, try the $25,000 account. It's less than it's round about $130. Two-step challenge. You know, keep those losses small. Focus on keeping your losses small. It keeps you in business. You know, whatever type of trading you're doing, but specifically if you're with a prop trade, the proptrade.com as well. It's very clear. We've got nothing to hide. You know, that's the rules you need to follow, and it's just good trading practice. You know, try and keep your risk less than 3%, and then you get to your funded account, and then real money can be yours from trading simulated accounts. But you know, what more could you ask for less than $150? $130 gives you a huge $25,000 equity account to trade. So come and join us, give it a go. Yeah, it's, you know, we're here to help you, my friends. Okay, take care. See you all tomorrow. Be good and have a great Monday evening. See you tomorrow. Bye bye.